Welcome back, folks. Dow Industrials are up 142. We get the Nasdaq up 21. S&Ps are up 10. I think when you did that update, wasn't it the S&Ps? They were up like 25 points.
Oh,
right?
definitely. Yeah. I mean, quite a little pullback that we've seen.
Yeah.
I mean, those are, what do you have, 10-minute bars? Check out that bar we're currently sitting in.
Yeah. So we just went from, 25.81. We just came down 20 points. We're up 30 points.
Yep.
That's a big number, folks.
It sure is.
Let's go over to our man, Mr. Darrell Martin at apexinvesting.com. You can check him out each and every day. Darrell Martin, Happy New Year, brother.
Happy New Year, man. How are you doing?
Morning, Darrell.
Great, man. Yourself?
Doing fantastic.
Well, we got markets moving, that's for sure.
Just a few.
Yeah, we got volatility going on like crazy, which is fantastic for the new year.
Yeah.
And have you seen, these are pretty sweet, have you seen the new touch bracket contracts over at Nadex?
No, talk to us about them. I saw them, but tell us how they work.
All right, so they trade with the market, in lockstep with the market. So you don't have any optionality, anything like that.
Yeah.
Okay? And, they're capped risk, capped reward. All right?
Yeah.
But what they do is they list 4 of them, like, on Monday. Okay?
Yeah.
And you can go in, and what they do is they put them where they start them off where there's only like, $100 risk on one contract, maximum.
Okay.
And so let's say it takes 5 contracts because they're $1, a tick.
Yep.
Let's say it takes 5 contracts to equal like an S&P 500 future.
Okay.
All right. Then on that contract right there, then if you did 5 of them, you're gonna have $500 max risk.
Yes.
That sounds like a lot of max risk, but if you think about it, you go over and do an S&P 500 future, and let's say you get a discounted day trading margin, you're putting up $500 anyway, right?
Yes.
And you're probably not going to take on the full loss. You're going to get out of the trade if it goes against you. So that's how most traders trade. Well, what these things do, so it allows you to put up that margin, but you don't have to. You can. They go through the end of the week. They trade through Friday instead of the current ones that trade just during the day.
Yeah, we get one up right now. Right.
Yeah, so you can trade all the way through Friday, so you don't have to worry about rollover margin increasing. Like at the end of the day, and day trading margin expires and it goes up to like $6,000 or whatever.
Sure.
So you don't have to worry about margin changing. If you have fast markets, you don't have to worry about margin going up because you know how they'll change the market if things go really nuts.
Okay.
Like right on in the middle of a trade, you get a pop-up from your broker or email or something. So you don't have to worry about that. You still are getting that great discount because every time one of these brackets, one of the sides is touched, a new one pops up at that same low risk. So they're going up or going down, be able to get that on. And then, of course, the one thing, the wording, their touch bracket, the range they trade in, if they hit either side, then it expires out for max profit, max loss.
Okay, so it expires if it touches either side of it. So it's kind of like a spread contract we've been dealing with them, except for the fact that if it hits that price, it just expires for full value on either side.
Exactly.
Okay.
And the other difference is there's always one available. So if the market goes real far away, sometimes you don't have a spread.
Yeah. Right.
Sure.
Which is really
we're familiar
cool.
with if you look at it, right?
That makes a bit. That's really cool because when the market moves too much either way, folks, that's
as it has been recently, right? Yeah, you get those huge.
Right.
And you don't have to worry about it being like 10 points off of the market because it trades at the same price as the market.
Right.
Unlike the spreads, because they're options. The spreads are more like strangles, things like that. And then the other big thing is they've made an update to NASDAQ. This is one of the things I'm most excited about. It's actually 600 points wide. It ticks in quarters on Nadex.
Okay.
And so it's $4 a point. Okay, so 5 of them to equal, NASDAQ future.
Yep.
But now they actually trade with the market. So if you if you try to trade NASDAQ before on Nadex, it can be a little challenging with the spreads because there's so much premium built into them.
Yes.
But now you can trade them just like you're trading a future contract, but with that defined risk.
Pretty cool.
Yeah.
Yeah. So I've been pretty excited about them. I've already put a bunch of them on, and I've had them go all the way. Like I had some shorts on that actually went all the way to hit the other side on the yen and on the Dow already. And so I'm just having fun with them. So I'm liking them quite a bit. So I think it's great for any kind of trader, whether they're experienced and they just want to have sort of a built-in cap trading plan, worst case scenario, or if they're brand new and they're wanting to get in and not have to put a ton of money up and have all that, the scary risk that can come with futures, but still have the same movement because it's
we've always liked the spreads versus the binaries. I know you like the binary, because of just what you're talking about, and you can see. I mean, just since 9:45, the Nasdaq 100 just went from 65.81 to we're sitting at 65.16. So just
exactly, and you actually have to take advantage of all that with the touch brackets.
Yeah,
so
Yeah.
But yeah, that's I've been playing with them. So I guess y'all have them up. Y'all been messing with them a little bit too, huh?
We just have them up. We haven't traded them yet. No, but that's,
they're just now getting the quantity going where they're starting to be tradable. Like there's 20 up now, so on every contract.
Yeah, no, I can see how that, and we get volatility in the marketplace, so that
Yes.
brings it into place, and I can see how this can be some heavy competition for the futures now.
Yeah.
That's especially day trading.
Yes.
Because why not?
Why not?
Do you know what I'm saying?
Exactly. But even if you're trading like for the week,
Yeah.
you can hop in there and the thing is like if you hit your max profit, if you do have which is a great problem to have, you just make 40 points, right? Then there's always another contract.
Right. Can you put the S&Ps up again? I'm just
sure.
So what
the
is
market or the chart?
No, I'm curious as to
This is the
how far the
S&P chart.
spreads. So the spreads are
here's-
40 points. I see. Okay, cool.
Yeah, they're 50. They're 50 points
50 in the
wide.
S&Ps.
Okay.
Yeah.
Okay.
And then 60 on Nasdaq. So 600 or 500 on a Dow. And then all the Forex ones are 250. So, which is great because you're putting up $50 for like a mini watt versus 200 something bucks over, or $600 on like pound dollar with the 20 to 1 margin.
So I think the Nasdaq 100 we have up for the touch brackets. There are 150 points they have in there.
Right, times 120 points.
Okay, we're looking. Most of the spreads are.
Maybe it's 150. Yeah, maybe I have it. It's
no, there's
$600
huge moves.
wide.
I mean, that's a nice.
And we've got them.
That's what I mean. That's good to have that 150 points in the index when you can move 80 points in 15 minutes.
150. I was thinking $600 had my numbers mixed because I was thinking 120 max profit. So yeah, 150 wide, and then four ticks a point, which is different.
Cool.
On Nadex because usually they tick in 0.1s.
I got you.
So they each tick in quarters.
Nice. So every point's I got you. Cool.
And of course
that made the contract a lot more tradable that way.
Nice.
Yeah, and then of course the currencies. I mean, we've had some monster move in these currencies too, and that's
like 200, 300 point moves going on in currencies.
Right. And if you trade in currencies, folks, you better be trading Nadex because.
Oh man. Especially as that March 29th approaches.
How about the crash? Yeah.
Yeah.
Right?
Oh, that
the
one.
Flash crash there, right?
My goodness.
I mean, that was about as intense as you could get.
Yeah.
Pretty cool, man. And of course we get the volatility in the marketplace, and these babies. So it's pretty cool. So if it hits one side, they just automatically pop up another one, right? Yeah.
Exactly. Every time one is hit, another one pops up with that, low risk, like 20% risk, 80% reward type,
And they start them right in the middle again, right? Is that what they do?
No, they start them literally like if it's let's say it's a S&P.
Yeah.
So they're going to start it with 10 points of risk and 40 points of max profit. So they're always going to be popping up the low risk contracts for you.
Ah, that's nice. They're setting it at the side of the spread that you like, risking 10 to make 40.
Right.
Well, they'll be 4 up already, so you'll probably already have one in the middle.
Sure.
Yes.
If it hits one.
I got you. That's cool.
Yeah, it's like sort of like there's no unless you're actually going to take on 10 points of risk. There's no reason to take anything larger than that on the touch brackets.
Right.
So
you gotta love it. Listen, folks, you can reach Darrell every trading day, apexinvesting.com. But Darrell, thanks so much for the update. Really appreciate it, man. You have a great week and a safe week.
All right, you too.
Thanks, Darrell.
Thank you. Stay right there, folks. Tommy and I are coming right back. We have the Dow Industrials up 167, Nasdaq's up 26, S&Ps are up 13. Come right back.